What's going on? Strat Soldier here for the weekend shift. I got something good for you. I got Michael here, and he's gonna tell you how to say his last name because I'm not gonna mess that up for him, and I'm not gonna mess it up. I'm not gonna mess it up. But Michael's here. He's a CMT, a Chartered Market Technician. All right, he knows what he's doing. Got a certification in this stuff, and he's great. I've been watching him for. He's great. I've been watching him for a while. I told you guys on the last show and the show before that I watch these people for a long time before I even ask them on the show, because I want them to give you valuable information that you can use. And we talk about the strat, but you also know that I've been showing you some other things. We talked about trading ORB, open range breakout. We talked about trading futures with the equilibrium block with Zeus trades. And we've been showing you some other things too. Why? So that number one, you have something else to go to if you want to, grow. And then also, you can hang with these other traders. You can talk. You should be able to talk the strat and be able to talk to another trader that knows what they're doing. And you two should be able to be on the same. You should, it should make sense. You know what I mean? What you're saying, what they're saying, you should both should look at it, be able to look at the same chart and go, yep, this is how we say this reversal looks like this. And they're going to say, yeah, well, we call it that, but we still get in that same spot. Like, I want you to be able to hang. It's all about education and growing and giving you that value. So today we're going to be talking about green means buy and red means sell. And we're talking about these candles. We always talk about the candles. We're always looking at candles, but we need to dive into the candle and what is the candle and what we're actually looking at. And then Michael has a pretty good method. It's actually an old school method with candles that I like a lot, but he's bringing it into the new trading field. I love it. It's awesome, and bringing it to new people. So Michael, if you want to go ahead and show us your video, and there you are. Hey,
Here I am. How's it going?
good. And then how do you say your last name again? I got to ask.
It's NOS.
Nos. See, I was gonna say
Yeah.
Nos, and you'd be like, no, it's not Nos. It's no, 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 no. You see, and I would have messed it up.
No, that's absolutely fine.
That's awesome.
Yeah.
Nos. That's pretty. I would see. I wish I went with Nos. Anyway, how's it going? How's things? And how's trading going?
Trading's going good. This is one of those times that I try to remind myself that I'm not a genius, right? Because everything's just it's happening a little too easily, right? But I'll take it for as long as it lasts. But yeah, I did a tweet just recently that people like just saying it's getting a little bit too easy, right? That now's the time where you got to remind yourself that it's not always going to be like this, right? Make sure you have a plan to keep it when it's going. When you see Dogecoin up 100% every day, something's going crazy.
Yeah. Yep. Yep. Yeah. It's interesting. This is the time when you get those guys that come out and say, yeah, every play that we put out there, it made all this money.
Yeah.
And then I just go, okay, just it's going to turn. We'll see if you can,
Yeah.
basically what you said. We'll see if you can keep it. What Steve Burns says, it's easier to make it, it's harder to keep it.
Yeah. No,
Mhm.
that's 100% it. It's a whole don't confuse brains for a bull market, right? You
Yeah.
could throw a dart at the board and buy and have a 70-80% chance you're gonna hit something for
Mhm.
now until the other shoe drops, right?
Yeah. Yep. And then was it next week? No, it's this week. Anyway, CPI was it, and then we got, PPI and the Fed. No, they do anything they can to shake it up, don't they? They just leave it alone. Just leave it
Hmm.
alone. Stop
Yeah.
playing with it.
You,
Stop
you
touching it.
go you go through the fundamental calendar and some weeks you just see like every day there's like 10 Fed people talking. I don't even know how many
Yeah.
there is, but just like
Mhm.
guys, just go play some video games or watch some TV or
Yeah. You're
just
saying the
leave the
same thing
market
the other
alone
guy
for a
said.
bit.
Yeah, exactly. Stop
Uh,
talking for a little bit. There was a
uh,
time when Jay Powell would get on the mic and the market would just go down. He's a terrible rapper. As soon as he started busting his rhymes, it went.
See, I remember stories anyway. I'm not this old, but I remember stories of when Volcker or Greenspan, one of these old Fed chairmen, would come in, people would look at how big his briefcase was and then
Oh,
try to decide whether or not it was good news or bad news, and then buyers. So this kind of stuff of like guessing what the Fed's going to say has been going on as old as time. It's just faster now, and they seem louder now for some reason.
yeah, faster now. Yes. I like talking to the traders that's been doing it for 30 years, and then you talk about how and you can see it, you read some of these books too, and you're like, yeah, we put in the orders, and then it's like 10 to 15 minutes before we get the close, and then there's like all this time they could just put whatever they want in, and then some I know 10 to 15 minutes might be a little exaggeration, but it was a long
Hmm.
time compared to what
Oh
it is
yeah.
now. And then they get an update on the price, and you're like, okay, now we're really buying, or now we're really selling. As opposed to like right now it's like everything's just like Christmas lights. It's just all blinking all over the place. If you don't know what level two is, go see what level two is. It's all over the place. It's just numbers just jumping everywhere. It's
Yeah, I
nuts.
used to. I'm not that old, but I've been around for probably 20 years, give or take.
Mm,
I've been trading
that's good.
different styles. And yeah, we
Hmm.
used to only trade level two, but this was back when, high speed internet was actually just starting to really pick up. So there's times where you'd be entering orders on stuff, and if just too much internet traffic was coming, everything would just stop. And obviously there was no iPhones. You couldn't connect from your iPhone or anything. So you would just have to wait for things to catch up and hope the price moved in your direction. And yeah,
Yeah.
for level two, back at the prop firm that I started at, you weren't allowed to look at a chart until like 2 or 3 months in. They didn't,
What?
you weren't allowed. All you did is sit in front of the level two. They wanted you to, and you didn't have a mouse. They took your mouse away because they wanted it was all about being fast on the keys, right? Can I enter orders? Because there's no HFTs then. So we were the HFTs, right?
Oh,
So you just looked, you'd have 5 or 6 level twos open of the stocks you were watching that day, and you were just watching for buyers and sellers, and you were just taking trades based off of that. Now, I wouldn't obviously recommend that anymore because this was before all these again HFTs and hidden orders and refreshing. And this was back, if you were going to buy 100,000 shares, you would put out a bid for 100,000 shares. And nowadays you'll hide that order with the dark pool or any number of things that you'll do. But back then it
yeah.
was you'd see that order, you'd punch in, you'd try to get in front of them, that kind of thing. And yeah, definitely different world now.
Wow. Yeah, that's interesting. That is very interesting. And yeah, and I think the most interesting thing right now that I've changed for me is they're trying to make the thing 24 hours. They're it's like it's dang near 24 hours already, but they're trying very hard to make it like let the money rest. You know what I mean? I've only been doing this for a while, but let it rest. Good Lord.
Well, it's a argument for more systematic trading. I think it only a matter of time. It's going to happen, right?
Yeah.
I've been saying that since Bitcoin came out. It's eventually it's gonna happen. I think
Yeah.
it's gonna really reward people who are okay with letting computers handle some of the order execution and that kind of thing, and it's really gonna punish like the degenerate on like the 30-second charts who's trying to buy and sell all day long because they're gonna burn out really
Yeah.
quick.
Yeah, the 30-second charts. I tell people all the time, like, okay, let's talk about what you've been doing. How's it? Well, I've been trading these 2-minute charts. You don't ever see me talk about 2-minute charts. Where'd you get that idea from? Well, I learned from no zero DTE. How do I swing this? All right, what kind of options did you have? Well, there was zero DTE. Well, you can't swing zero DTE, buddy. Let's
Yeah.
I don't know. There's a lot of bad
Well,
ideas out
it's
there.
Yeah, so the lower time frame you go, and again, I was there when these things got put in place. The lower time frame you go, the more you're fighting the HFTs, the more you're in the battleground with Goldman Sachs and JP Morgan, and right. It's like I don't want to fight these guys, so I'll go to a 30-minute chart or longer. I rarely look at anything under a 30-minute chart nowadays, and it's because yeah, I don't have to battle these guys who are ticking everything up and down all day long, and
Yeah.
I'm just too old. Too old.
No, no, not too old. So I want to talk about candles, and
Yeah.
so I'm going to put up mine, and then I definitely, if you can, show us yours, because I mentioned a little bit of what you do, and just to explain just a little bit what we got going on, and you'll probably tell me this is dumb. No, I'm kidding. You've
No.
been watching me for a while, but here
Yeah.
in the Strat, we always look at four time frames all at once, and we're looking at multiple time frames for time frame analysis. So we're right
Hmm.
now we got buyers on the month, yeah, for this for SPY here in November. We got buyers on the month. Everybody knows this is this week, but I like the market because it's hard to get. It's sometimes you get lost in all these charts, but
Yeah.
and we got it's red on the month right now. Not a lot going on. We got some profit taking because, and I say it's profit taking just because it's not doing this. You know what I mean? If it was, I feel like if it was real selling,
Yeah.
it'd be doing some nastiness, right? But it's not really
Hmm.
doing that. It's just profit taking. Even though these 60s, are that's a nice downtrend, but you zoom it out a little bit. I mean, it's not really getting killed. Um, so, like I said, we're always looking at the relationship of the green and the red in the most aggressive participation group. So, right now, I would say the sellers are in control just because we got green. We do have green on the month. You know what I mean? It's not. This is not a shooting star. This is not. They're not really killing it on the month. They're not destroying it. But on the week, it's not green. It's red. There's some selling there, and we got some selling on the day. And like I said, these 60s, this is not a time to buy. We're waiting. If you're not good at buying, shorting things or buying puts, it's a time to just sit in cash and wait. And I'm always reminding people cash is a position. That's okay. And
Yep.
it's time to wait. So that's what we do. And I'm always telling people green means buy, red means sell. And I'm not telling people, hey, it's green, just start buying everything that's green. I'm not saying that. I'm just saying it's green. The institutional buyers are buying on the month. Let's go look at Disney real quick. DIZ, the mouse in the house. It's green. The earnings were great, good. And here on the month, we got buyers on the month, buyers on the week. We do have a shooter on the day now, so we'll see what they want to do for tomorrow. Um, we will see what they want to do for tomorrow, but we all know this is red, this is selling, and then we did have some good action here on the 60s, but on the 60-minute chart. But they were buying for the first hour, and then this, here it's coming to the downside. It's
Hmm.
red. So like I said, green means buy and red means sell. And I'm always trying to get the new traders to understand that because it's not bad, but we have Trading View, and they let you change all the colors to either all blue or all yellow or all pink, and I try to tell them like at least have two colors that lets you know this one's going up and this one's going down. Because what you don't want is this, you have an indicator like a lot of people like to use like scripts, and anything that's up, any candle that's scenario two up that takes out the highs of the previous range, that's going to
Hmm.
be green. We'll say that's going to be green no matter what. But it's not green. It's actually red. There's actually selling here. So I tell people take those scripts off. We want to know if they're really selling, and that's indicated by the red. So that's what I do. Like I said, to keep people honest with themselves, and then so they understand what's really happening. So how do you, I mean, and then I noticed you use black and white charts, and that's how they did it in the beginning, back in
Yep.
was it the 80s and the 90s? Is that true?
If we're going way back to the creation of Japanese candlesticks, you're talking the 1800s.
Oh,
Um,
hmm
yeah, like hundreds of years ago. I forget the gentleman's name. We were talking a little bit about him in the pre-show, who was the creator of Japanese candlesticks and did it in the rice trading pits and became some nerd, inflation adjusted his net worth, and he would have been worth like billions of dollars now just from trading rice back then. And yeah, that was the basic idea, is that uh, he didn't have the time, right? So he would watch the prices all day and he would just write down what the high and the low, what the opening print was and the close, and then he would draw them out. And he would just go through and draw the actual candles. And that's how candlestick charting started. So it started with white and black, because he was writing on a white piece of paper and he just wanted to draw the outline of the candles that were going up and then color in the ones that were going down. But he didn't have time to sit and paint all of the different colors and all of that. And it's funny there to this day to kind of carry the tradition on. Ralph Alcampora, who is kind of the godfather of technical analysis, he's argued in front of the Senate of the US that the CMT should be worth as much as the CFA. He's been doing this for 50 years. He created the CMT. Every month he goes out to his barn and people can Google it and he paints the Dow candle every single month. He's been doing it for like 50 years or something like that.
Uh-huh.
And the Smithsonian has actually contacted him and said when he passes, they want to take and they want to cut the side off the barn and they want to bring it in there. So it just shows that there's still people that are doing this kind of manual thing today. And yeah, that's why they started off with this white and black color because, again, it's just easier. Same reason why, you hear people talk about the 200-day moving average. Well, what significance does the 200-day moving average have? Well, there's roughly 252 trading days in a year. But if you, before computers, if you were sitting and calculating a 252 period moving average across all stocks, it's really, really hard. And even for computers back when they were new, that'd be hard. But just dividing everything by 200, that makes more sense, right? Or
Hmm.
same with people use the 10-day moving average. It's just the math is easier. There's no significance to it at all. It's just easier math. So that was the reason behind them.
Nice. Okay. Yeah, I did not. Yeah, the 200 day makes sense. We always make fun of the 200 day.
Right.
We make fun of it not because it's dumb, but just because we don't trade the squiggly wigglies and all that stuff. But I do
Hmm.
understand moving averages, and we understand that there. But I appreciate you defining that because there's a lot of people that just, and also the history of candles because we've all been doing this, and no one ever defines what it actually is, or and no one defines why do we use 200-day moving average?
Hmm.
Why do we do this? What is CPI? Anybody out there, go ask the person that you've been trading with, ask them what CPI is. They better say, I'm not going to give you the answer here. But I make a when I tweet stuff out, I did it earlier this week. I try to make sure because everybody there's all these abbreviations. I try to spell it all out. I mean, that's the army side of me. Like, spell it all
Hmm.
out. Like, you can give me all it's the DFAB. Okay, well, what's the DFAB? I don't know. That's just what we call it.
Hmm.
Nah.
No, you need to have yeah, and I always say that too, and I don't know how many times I've been talking to traders or mentoring traders, and they show me their charts and they've got all these indicators on them, and I go, okay, what's the math behind that indicator? They have no
Hmm.
idea. I'm like, so if you don't know like what it's mathematically telling you, because every indicator out there pretty much is based off price and volume. And
Hmm.
if you don't know the math behind it, then how are you going to trust it as a signal? Like it seems crazy to me. It's like not knowing even the fundamentals of how a car works and just wanting to go for a drive. Like take a second and just say, okay, what's this thing telling me? What's a moving average? I even something as simple as a moving average. I've asked people like, I don't know, just seems like when price gets there, sometimes it bounces. Like, well, that doesn't make any sense, right? You have to have a reason for it and a reason that kind of makes sense from some sort of psychological bent, hopefully, that has some sort of explanation about why these things work instead of just kind of randomly, you know, just, hey, I put it on there because I saw some guy on YouTube telling me to do it kind of thing.
Yeah. Yeah, 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 yeah. So that's awesome. I appreciate that. Yeah. If you got some candlestick charts so we can see everybody can show everybody what I'm talking about. Hold
Yeah,
on a second. Let me see here. Yep, yep. There you go. There you go.
cool. All right, yeah. So, and just a bit of a context of kind of why I guess I do stuff a little bit differently. So I'm a systematic trader. I'm a quant mostly. So I test everything, right? I have back tests for everything that I do that go back to 1980, right? I just want to
Wow.
have that where I program in something and I want to know, okay, does this work? Can I prove it? Can I put my finger on it and say, okay, this is how things work? And the benefits of that is, right, obviously I can tell you, again, going back to 1980 before I was even born, what would happen if I traded this certain thing a certain way across a portfolio. And the downside to that is it's really boring. So, you're waiting long periods of time sometimes for something to happen. And what I found is kind of from the psychological point of view, is the more flashing colors that were in my face, the more that I had even anything kind of happening in real time to try to tell me what was happening, the more I would jump onto trades early or revenge trade or overtrade. And these are common problems that, every trader has had at some point. And if you don't, you're probably lying. The So for me, it was okay, what do I need to do from almost like a stimulus point of view to make it so that I could see things clear and I wasn't so hyped up with FOMO and all of that. And one thing that I found was just turning the colors on my chart off actually ended up helping with that. I can zoom out a little bit easier and I can see the patterns better. I can see the market better without having all of these kind of flashing lights in my face. Because my process is I've tested things, I set alerts, I run all my systems every weekend, I put out alerts. They'll tell me when that price occurs. And then until then, I wait and I watch markets. And then when the price is hit, then I actually do something. So it's more of a trying to keep things clean mentally. And I think the tweet that you ended up responding to me on this was, I wish I could prove this in some way, but I think for a lot of people, especially people who have these problems with over trading and stuff, I wonder how much it has to do with kind of the gamification of these platforms where they're trying to make it very interesting to watch. Robinhood, I think, actually got sued for this. When you take a trade, it would like throw
Yep.
graffiti at you and
Yep.
fireworks and because they want you to trade because they're selling your order flow and they're making money off that.
Yep.
So I wonder how much kind of toning this down, even though my charts have the same information as your charts do. If you look at my chart of the SPY, it's the same as your chart of the SPY. I just wonder if there's some sort of psychological benefit. And at least I found that for myself.
No, that's fantastic. And I actually talked with another trader earlier this year. He calls himself Charts with a Z. Pretty cool name. And but he said the same thing, and we had a good conversation about that too. The gamification of trading. Now,
Yeah.
I am happy that that Robinhood came out and they decentralized trading, the
Hmm.
market so that the average person can do it. That's how I started. I started on Robinhood. I haven't done it yet, but my next podcast on Enforce is going to be get off of Robinhood because Robinhood's like training wheels. It is. It's training wheels, and you do get.
Hmm.
Well, I guess they don't do it anymore because it's been a long time. It's been years since I've been on Robinhood, but it was confetti. You bought few shares of Ford confetti, and then you took your profits on that, and it'll say this is how much you made. Good job. Now with common shares, you know what I mean? I was good. I handled that very well. But then
Hmm.
when it came to options, they do simplify buying options and they make it really quick. So all you got to do is swipe it, and it's now you're they tapped into the fact that everybody's addicted with I posted a video earlier this week about everybody's addicted to pushing buttons. So
Yeah.
everybody's addicted to pushing buttons, and you're already swiping left and swiping right. So they Robinhood just was like, okay, well, it's just this is how they buy it, and this is how they whatever,
Yeah.
and it made it really easy. But that is how you're over trading. And then yes, the bigger picture is they're selling your order flow to Citadel, and they're making. I better not say no too much. You're gonna get me shut off of the off of YouTube.
Yeah,
But
they're
yeah,
they're gonna tap you on the shoulder, but it's
yeah, yeah, yeah,
100% right. It's um it's one of those things, and I think if we're just going in the psychology of it,
yeah.
I think the problem is in most everything else you do in life, more is better, right? If you want to get in shape, you go to the gym, and if you can go to the gym more than the other guy, you're probably going to get in better shape. If you're working in the corporate world, if you
Mm-hmm.
can show up to work before everyone else, and then you can leave after everyone else, that's probably better. Same with studying. But with the market, it's the complete opposite. It's less is better, right? You should have your setups. You should have tested those setups in some
Mm-hmm.
way, and then
Mm-hmm.
90% of the job's just waiting. And everything that I find that kind of tries to pull you away from that stance of I'm waiting. You're a military guy, so like a
Yeah.
sniper, right?
Yeah.
If a sniper's just sitting there shooting all the time, well, they're gonna find him and he's dead, right?
Yeah.
It's
Yep.
waiting, it's taking your shot, and it's the same thing with trading. So I find there's a lot of things in trading that they make look visually good, and a lot of it is to make you trade more because that
Yep.
benefits the broker. It doesn't benefit you, it benefits them.
Yep. No, that's a great point. That's 100% great point. I didn't think we'd go. I didn't know we'd go into that, but that's a great point. And then that's all. And that's why I want you on here because we do match on a lot of things. But this is my
Yeah.
tank. And there you got other, but you got the plane back here, and you got all the
Hmm.
soldiers running around, and they're trading 5 minute charts, and they're going through this hole and that hole, and they're taking out these guys, and there's all these trades. And I learned a lot. I learned really early. I'm slow, and and I want to find that winning position. And Disney's working on the quarter. It's two up on the quarter, meaning this quarter's trading higher than last quarter,
Hmm.
and it's working. And I'm going to put my tank in that position, and I'm going to keep firing on it, and I'm going to keep shooting it till it's dead. Once Disney's not working anymore, then we'll move the tank. But but I got my machine guns. I got my machine guns if I want to do a quick futures trade or a quick, options trade. But I'm not these two little guys ain't going to win the war. It's my
Yeah.
main weapon is those common shares, and that's the tank. And it's slow, and but daggone it, I'm not jumping in and out of everything. I'm not. You can't just rapid fire a tank. You know what I mean? And it's again, it's another analogy, and that's that psychology. But it reminds me to just like take it slow. Stop trying to do all these crazy things. Stop trying to be a hero on the ground. There's people that do that, and that's awesome. I love that they do that. I
Hmm.
tried to do it, and I learned, like I said, I learned quickly. Nah, I don't want, and then I find other. I'm that's the kind of trader I'm talking to. If you trade
Yeah.
2 minute charts, I'm not against you, but daggone it. Good luck to you. Hopefully you can survive because there's a lot of people I started this in 2019, and there's a lot of people that aren't there no more. They're gone.
Yeah.
So,
Well, and I think you hit the nail on the head when it's about finding your psychology, right? And this is a big journey that I went through too, because I initially started to trade at the prop firm. Again, I was the HFT before they existed. I had days where I took 300 plus trades a day.
wow.
It was crazy. And then I went to work for a hedge fund for a period of time and saw the kind of longer term bit of the market. And then I came back to trading after all of these HFTs have popped up and said, "Oh, I'll just start doing the same thing I was doing before," and got completely blown out just kind of right away.
Oh,
And it was a bit of the market, but it was a bit of just me getting older and my psychology trading. So that's why I'm much more of a quant now because I tried the purely discretionary, I tried day trading and futures trading and all this, and what I landed on that works best with my psychology is just this. I spend all of my day back testing strategies and really only a few minutes a day actually placing orders and placing trades. But like you mentioned, someone might be completely opposite. They might not be able to sit like I do and test strategies and code things in and do all this. And then they should find a different route, right? At the end of the day, it's about being systematic in some way, whether that's using something like the Strat, which I've studied and I think is great. Even though I don't use it myself, I love it because it's trend following and it's
mhm.
systematic in nature, which means you just have a process that you're going to repeat every single time. Or whether it's something like I do with quantitative, at the end of the day, you're right. It's the people who you see around for a long time have these processes in place, and then the guys that you see come up, maybe they get popular and then they completely disappear. You'll see them kind of gravitate to different styles very, very quickly and hop around between different indicators and all of this very, very quickly as well. Yeah, so again, it's about finding what works for you, right? Did not work for the guy next to you, not work for the guy on Twitter, but whatever works for you and makes the most kind of sense to you personally.
Yeah, that's awesome. This is good. I like this. This is going to turn into other stuff. I like it. This is a good conversation. More about these candles. So you're
Hmm.
zooming them out because I always tell everybody zoom them in so they're really big so we can see, like you said, the strat. I want to see scenario two up, and then I want to see that three. And we're really only focusing on like the first. We're focusing on this month, and then maybe this week. We are looking at this week and then like a few weeks back, just to see where
Hmm.
we're at. And then the days we're only looking at this day, yet this week, and in the 60s we are looking at the whole day of the 60s to see what the overall day is doing. But the current bars are what we're looking at. So what do you do? You're being a quant trader again. That also matches up with what we do, which is why you're here. So yeah, let's see what
Yeah.
you do and how you analyze things.
Yeah, so for me, it always starts with a back test. It always starts with something that I can prove. I can go back and go back to again 1980, and I can find out that buying this thing at this price for whatever reason it is, this is what it would get me, right? The average return, um, the risk reward, what all that is, right? So this TK tankers stock came in what's just called a mean reversion strategy, which just means that on the weekly chart, it's a little bit oversold. I know that if I buy it or where I had this blue line, which was the alert that I set on the weekend where I run all the strategies, I know I got a 56% chance that it's up 1 week later, and it's going to be up a little bit more when I'm right than it's going to be down when I'm wrong. And that's kind of where things start. So that's the reason to look at it. And then, but what I want to do is as it gets to that price, I just don't want to just programmatically buy it. And there's people that do that. They just run pure black box systems. And again, good. That's fine. That's fine for them. But when I'm buying something that's coming down, I want to use candlestick charts to show me some idea that there's some buying down here because I just don't want to buy it because the system said to. I want to see that in the market to have some sort of evidence that there is. So that's where, for me, again, candlestick analysis will come in. So I'll first look, see if there's an area of support or resistance. I give some weight to that, but not a huge amount. But when it comes to actually watching the candlesticks play out, I'll do just like you do, where I zoom in. So, it triggered on this day right here, and you can see just a little bottoming tail on that day, right? And
Yep.
it's important for the audience to know all a candlestick is telling you what happened on the time frame under it, right? So on a daily chart, it's telling us what happened intraday. This at some point was a big black candle, which is down, and some buyers came in, and then the next day it gapped down again under that price, and then rallied up on the day. So that to me is okay. That's enough evidence that I can now put a trade on this. I can buy it based off the rules of the system, put the stop where the system says to do it, and take the trade. Because so for me, that's the primary use of these type of charts. That and relative strength, which I'm sure we can talk about later if you'd like. But the idea is the system is telling me what should happen again with a 56% chance or whatever the percent chance it is. Um, and that's all I'm using those systems for. And then it comes into, is this actually a case? Because there's another trade. I can use another example. And it was ZETA,
Yeah, I've
which
seen. Mhm.
that one said to buy it right here. I did a whole video. I think you comment on that too.
Yep.
The video
Yep.
about this where it was the same thing where it said again on this day on Friday when I ran my system over the weekend, it said, hey, if this gets to like 31 and a half, you buy it. And then all of a sudden, 30-minute chart again is the lowest time frame I'll ever go into, but you can see it hit that price and there was just no evidence that I found that there was any buyers that were coming in. Now, I got very lucky here as well because I think there was a short report put out or something and this thing right, just completely fell apart. Now, I would have been
Wow.
stopped out a long time ago, so I wouldn't have
Yeah.
taken a hit like that. But I was able to avoid this trade entirely because there's just no candlestick pattern here that I could ever identify to say, the buyers have come in and they're showing that they're defending this price. So I just let it go.
I'm getting chills because this is a if you're at home, especially if you're on the weekend shift, if you're on the weekend shift crew, meaning you're one of the regulars, if this is not getting you excited, you need to watch it again. And then because is exactly what I say almost every Saturday. Like what there, so to go back so I don't get off the point.
Hmm.
Michael put out this video of Zeta. When do we want to break our rules? And I was being a little smart mouth, and I put never, like Lynn. I left it alone. And then I was
Yeah.
like, nah, I like this guy. Let me go back. And so about 10 minutes later, I went back and I actually watched this video. And I watched the whole thing. And you do algorithmic trading, and you have all this stuff programmed, which is awesome. And
Hmm.
you're like, and you went through the charts, and you're like, just like you said, this thing said it was going to be a buy, and but you actually look at the charts, and they ain't buying. And I tell that same thing to everybody.
Yep.
Like we have our actionable signals. We look for hammers, we look for shooters, we look for inside bars, and we're looking for those things to go in force. If that hammer is there, we do not get in early. We wait for that next candle to open, and then once it goes in force, just based on our trading system, that's that's
Hmm.
that's when we get in. We don't get in early because how many times have you seen a hammer, or a shooting star, a shooter, and they're like, I'm just gonna buy a bunch of puts. This is gonna be good. I'm gonna buy all these puts. It's gonna be great. And the next
Yeah.
day, I'm gonna make all this money. And then this thing gaps up. this thing gaps way up, and now you're wrecked because you
Hmm.
you got in early. You bought all these puts early, five or six, seven contracts, which we don't tell people to do that either. But and then they get destroyed because they are trying to predict in the market, number one, and then number two, just because it was on the screen, they said, we're going to do it. It'll be fine. But so
Yeah.
anyway, I just love the fact that you're like, okay, let me look at. I got my alert. Let me go see what's actually happening. They're not buying this.
No.
They're absolutely not buying this. It's going to the lows. So then you have a decision. Okay, do I trade this to the lows or do I leave it alone? And I like the fact
Yeah.
that you just said I left it alone. There's a lot. I would say the ideal stratter trades both sides because Rob used to say that. If you trade to the
Hmm.
highs, you trade to the lows, you make double the money than how much it actually moved. That makes sense. But I'm getting to the point where I'm telling people if you're only good at going long, go long and then stop and then wait. You know what I mean? Don't try
Hmm.
to do stuff that you're not good at. Some people don't have the accounts big enough to short shares. Okay, that's fine. Then you got put options. Well, they're not good at put options, so they're just terrible at options. So
Yeah.
like for me, for example. I trade. That's when I go straight to micro futures because it kind of moves and acts like not say moves, but it acts like common shares in the fact that I can put in a hard stop and I know
Hmm.
where it's going to go and I don't have to worry about the Greeks and all that crap. But I'll go,
Yeah.
if the market's just tanking, I'll go, short the futures because sell it to the downside on micro futures because I know I can handle that. Number one, number two. Um, I can manage it a lot easier than options, and I'll make my money, and then that's it. I don't need to compete with all these guys that are posting all these big gains. That's awesome, and big ups to them. I'm not down on them. I'm just saying
Hmm.
I'm not that dude, and that's okay.
Well, and yeah, and it's for me, it's the same. And first of all, I can't I haven't been able to test anything yet, and maybe I will, and that will change. But again, for me, it always has to start with, can I put my finger on a back test that I know has some edge over the market that I can exploit for a long period of time, and to the short side, especially from the swing time frame, that's really hard because just things go up over time, right? So it's one of
Hmm.
those that if you kind of naturally want to play with some edge. If you pick any point in history and you go out a year, there is like a 76% chance that the market's up from that point that you picked. So it's like
Hmm.
you have some natural statistical advantage already just baked into going long. So I like that as well. And I do the same thing as you, except as more of an equities trader, I just trade some of these inverses. If I really think the
Oh
market's
yes,
going to go
yes, the
down,
inverses. Yep. Hmm.
yeah, like the TQQQ
Yep.
or something
Hmm.
like this, where if I do, or no, SQQQ,
SQQ. Yep. Mhm.
yeah, if I think the market's maybe I have a full portfolio and I'm getting a little nervous, there's an event coming up or something, then I'll put some of this on just because it gets the inverse. Plus, I do a lot of trading in like retirement accounts, things like that, where you can purchase this, but you can't short stock. So, yeah, there's certainly a lot of ways to do it. I will say that the short side of the market, again, I have always found is way harder than the long side. It's more volatile, right? And when things are
Hmm.
dropping, they're doing so in a more volatile way.
Yep.
So yeah, I agree. I mainly try to stay to the long side or in cash. I have a lot of my systems, and I can show you the back tests on some of them, but they just have periods of time where they just go to cash. There's just no edge. The market's too volatile, and it's just built into the system that says don't do anything.
Don't do
And I just
anything. Yeah,
I just I just work less during that.
that's
Well, sorry,
awesome.
I trade less, right?
Uh-huh.
Working on your trading shouldn't be trading, right? And in my opinion, and I always just use like a boxer analogy, right? If you're a professional fighter, the amount of time you actually spend in the ring fighting is very, very small considering to what you're doing as a boxer, right? Most time you're watching tape or you're running drills or you're doing conditioning or you're doing all these things. And I kind of treat trading the same way. The amount of time I want to spend in front of my screen pushing buttons to take trades, I want it to be like 5% of my overall what I do for trading. The rest of it is back testing or it's learning about new systems or programming systems or recording my trades or journaling or something else that I consider work, but it's just not actually hitting the buttons, right?
That's fantastic. I like that. I've been telling people paper trade, don't get on Twitter and say you made all this money. Don't do that. But
Hmm.
if you have to push the buttons, you know, go to TradingView and open up that little, you know, they have I'm gonna say fake account, but you know, a simulator, you know, that you can use. And if you have to, you know, just do it that way. That way you're practicing, you know, and you practicing what you're doing. I was during August and September, I was like, I kept showing everybody the seasonality charts. Like September, you know, August, September, they've been red for the last 6 years. Stop trading during this time. Go do maybe
Hmm.
do a prop firm if you have to trade, or do just paper trade and practice and learn and or learn something else. And that's when I started showing ORB, open range breakout, and I started showing some of these other trading strategies that they can learn while we're
Hmm.
just sitting and waiting because during those times, that's when people try to overtrade and then they get wrecked, you know? So,
Yep.
yeah, I love everything you're saying. That's awesome. Is there more to what you're so my bias, me personally, when I see things down in a downtrend, I know it's opposite on my camera, but when I see things in the downtrend, um, before I will even, it has to give me a reversal on the week to the upside before I'll even touch it. Like some people they'll try to do that on the 60 minute, and that 60 minute will trigger the daily, and the daily triggers the weekly, and the weekly trigger. I'm not saying it doesn't work, but I'm not going to put my money into something that's not going up at least higher this week than it was last week. That's my criteria. So for you, you did show us a little bit of that, but what's your minimum? Like it has to be doing this before I even decide I'm going to even, mess with this. I think you showed that already, but maybe you got another example. I'm sorry if I'm asking you this,
Yeah.
show the same thing.
No, no, no. Again, that's fine. And let me just grab. I'm
I
just
like your
gonna
boxer
do
analogy too. Yeah, because if a
this.
boxer's fighting all the time, he's going to have name damage.
Yeah, absolutely. Let's do. Yeah. So this is for example. So these charts aren't very pretty, but
Nice.
we'll use them. So this is the back test of the current systems that I run, right? So the gray line is if you take the three systems that I'm currently running combined. And then each of these lines is one of those back tests. So you can see like the red line goes completely flat a bunch of times, and that's where I was saying this system goes to cash
Mm-hmm.
when the
Wow.
market's not in an uptrend, right? You can see it
Mm-hmm.
went to cash most of 2022, 2023, and then came back in the rest of the year. So this is for me always where it's going to start because what it does is it tells me which of these systems I'm running and what the hold time of these particular systems are. So the red line, for example, is my trend following system. And this is again the reason I love being able to test these things is because I know the average hold time to a successful trend following is like 2 months. And if I'm right and if I'm wrong, I'm out in about a month, a couple weeks to a month. Whereas the weekly mean reversion system, I'm out the next week. That's just the rules. I buy it and then it's out the next week. So that's where it's always going to start for me because it's going to tell me which of these systems I then want to what kind of time frame I want to look at, right? So if we go just back into the candlestick charts, what I showed in the TNK, this is a mean reversion system where the system tells me to get out Monday morning. Now, for me personally, that's an area that I'll add discretion as well. If I'm doing really good on the trade, I'm not just going to get out at an arbitrary period of time. I'm going to let that run for a period of time. So, but because it's a short-term chart, I just only want to see a couple 30-minute candles, maybe even one day holding that price range. But if it's something like my trend following system, which this week triggered in Twist, I want to see kind of a weekly close above because you can see this is another one that was a
Golly,
failure. Yeah, it
man,
was.
that's nasty.
Yeah, and so this
Whoever,
blue line, delete
yeah, go
this,
ahead.
Jen,
I'm
delete
sorry. Go
this.
ahead. Go ahead.
Yeah, this blue line is the entry trigger saying, hey, if it got above this blue line, that's where you should
Mm-hmm.
look to buy. You can
Mm-hmm.
see it did that on there's Monday's candle, and then just completely fell out of bed, right?
Yeah.
So in this scenario, because if I'm right on twist, I'm going to hold it for a couple months. I'm okay waiting. I want to see a couple days, maybe a week close above that candle, and then I'll get involved. So
Oh,
it
okay.
first starts with the length of hold time in the system, which is one of the benefits that I have of back testing, and then it's how long do I want to see that kind of action take place after that.
I like that. I like that. I like the whole time for about 2 months. I like that. I'm gonna write that down because I'm gonna look at that myself and look at my own trades and see if that because that makes sense to me that about 2 months, that's interesting. Um
I think that
and
works too. I think 2 months makes sense too because it's generally between earnings. Earnings is
earnings.
about every
Yep.
3 months. So I
Yep.
think doing every 2 months kind of makes sense because you're generally in after one earnings report,
Hmm.
and then it takes a couple months for the market to digest that earnings report,
Yeah.
and then there's the following one. So that's I
Yeah.
can't prove that, but that's my theory
No,
behind two
I like
months.
that. 2 months. I'm not going to steal it. I'll tell it. Everybody, it's the 2 month. It's the Moss 2 month net theory. That's what it is. No, I
Cool.
like that. I like that a lot. But go back to the other chart.
Yeah.
Those 60-minute charts. I'd be telling people
Oh,
do not, or yeah, yeah, good twist
yeah.
on the daily what it was. I guess it
Yeah.
was the daily. I'd be
Right
like,
here.
I'd be
Yeah.
telling people do not touch this. Golly, or what was it? No, it was
Hmm.
the weekly. What was the other? What the
Oh,
you had the
yeah.
symmetrical triangle.
I had that drawn in here.
Yeah, yeah, yeah. I'll be like, no way. So,
Yeah.
I love this because you're showing a different way. You can't, no one can see my cursor, but I'd draw a broadening formation on this thing, the opposite direction, and I would be showing this thing is trading sideways. This thing is trading sideways. I mean, you're just
Kind of
showing,
like
you're showing that it's doing the same thing. Yeah, and then I would take that. Yeah, yep, yep, yep. And
kind of
then,
like
yep.
that.
Yeah, exactly. So we would do,
Okay.
yes, yes. And we'd be showing, okay, this thing's trading sideways, doing nothing, leave it
Hmm.
alone. And that's perfect that you're showing it just the opposite direction. And then for you guys out there, the stratters, this is why I brought him on. So you can see, okay, the stuff that we're talking about, it's not Fugazi, like it's real. Like we're just seeing
Yeah.
it different. Maybe we're drawing the lines just a little bit different, but me and Michael are having we can hang. We can have a conversation about trading, even though we call things different things. We have our fun little nicknames about stuff, and I'm sure Michael
Hmm.
has his own too. But we all can look at this and go, "That's a mess. That is
Yep.
not a buy."
Yeah, and that's why again it made it very clear that this area right here, the
Yeah.
system's saying buy it here, and I'm
Hmm.
saying no, I want to see a close kind of up in this $50 area before I'm interested. And like I mentioned before, I don't use the strat. However, if I can ever back test something that works, I will. But what I love about it, speaking to all the people that have been doing it and doing some studying on myself is it's systematic. And at the end of the
Hmm.
day, that's what I think every trader needs. Most people come into this game and say what real traders do is they just look at a chart and they'll just know whether the thing's going up or down and they just buy or sell, right? And in sometimes it takes months or years for people to figure out that no, that's not what happens. What real professional traders do is they have a system, some system. I'm using nerd quant stuff. You guys are using something completely different, but it is a repeatable system that you can do regardless of, your mood or how you're interpreting the chart or whatever. Because if you just threw three technical analysts at this chart and just said, "What do you see?" They're all going to see different stuff, but it doesn't matter because we're playing a game of probabilities. So at
Yeah.
the end of the day, it's just saying, "This is the way I look at things. This works for me. I know that I'm going to buy when this happens and sell when this happens, and I don't need to leave it up to chance or what my mood was, whether I got in a fight with the wife or
Yeah.
or what it
Yeah.
is. It's that the
Yeah.
rules say do this, so I'm going to do this. And whether you're a quant or you're more discretionary, again, this whole being systematic thing at the end of the day, you just have to, I think, to survive in this game.
Yeah, definitely. And we so the Strat the name before Rob dubbed it the Strat was actually it used to be called the Quant Edge. So when I got in, it was called the Quant Edge, and
Hmm.
uh and it's still by Rob. And it would, but he always emphasized things that we're going to trade things as quantifiable. We can measure it on the chart. We can
Hmm.
no one's gonna you can they can argue with you as much as they want, but this is an inside bar. Like
Yep.
this is, we're not trading while this thing's forming. The things we say, and then here's our actual targets based on the actual what's actually on the charts, not just some weird, measurement and hopefully it goes and all that other stuff. Like if
Hmm.
it goes here, it's gonna this is the next target we're looking for to take out. If it doesn't do that, this is where we're getting out, and so yeah, that's where we yeah. you being a quant trader, and that's what we got. We're together. We're on that. We're on the same page on that, and this is fun for me. I like it a lot. It lets
Yeah,
me know I'm
and
not crazy.
well, and I mentioned briefly there that I worked in the hedge fund space for like 10 years. And a lot of what I did was this was around the Bernie Madoff time where no one trusted anyone.
Yeah,
So a lot of what I did was we were kind of a consultant firm, and I would go into hedge funds and see what they did and try to make sure what they were doing was legitimate, and then also what their risks were, right? What kind of risk in this particular trading style it was. So anyway, the benefit of that was I get to see a lot of hedge funds and how they traded and how they worked. And just like with traders, the ones who just had some sort of random fundamental thesis and took trades on those guys came and went. The ones that did the best had some sort of systematic approach, and sometimes they beat the market, and sometimes they didn't, and sometimes they made money, and sometimes they didn't. But over the long run, they were consistent enough that they stuck around. So that's actually where I started to get into more quantitative trading, because you'd go into one office and there was a whole bunch of guys in fancy three-piece suits, and they're yelling at each other, and it's the typical trading floor that you think you would see on the movies or whatever.
yeah,
And those were the guys who ended up failing. And then you'd go into another one and there's a bunch of nerds on spreadsheets calculating stuff, and our system told us to buy here, and talking about that. And they're usually just wearing polos or
yeah.
whatever, and those guys were the ones that ended up making the money. So it really kind of gave me a good insight to, okay, this is how it actually works, right? You have systems, you have a rule, you record everything, you record every single trade so that you can go back and you can test and you can kind of figure out where you're doing good and where you're doing bad, and then after that it's just a numbers game.
That's awesome. This is awesome. This is a great conversation. Yeah, and another thing about things being quantifiable is you know what happened and you know what didn't happen. Just like you said, your signal said it was a buy, and then you got this big giant. We call that a scenario three, but you got this big engulfing bar that just took out the highs and the lows
Hmm.
on twist, and you know, okay, this is they're not buying this. I'm getting out, and you're not sitting there going, well, maybe my MACD's not. Maybe I should have bought it before it crossed, or
Hmm.
maybe I don't have enough. I need to put a 5 day moving average on here too, just because. Like I see other people doing that. I got the 30, I got the 200 day, it's already above that. That's good. I got the 15, I got the 10. I'm gonna put the 5 on there too. Well, maybe the VWAP too. I think I need the VWAP, and I'm gonna take off this one, but I'm gonna add two more because and it's just because. So now instead of like having a conversation of I knew daggone well that I shouldn't have bought calls on this thing, but I did anyway. And this is what happens when I don't follow my rules. And you're having an objective conversation with yourself in the chart, and you see,
Hmm.
okay, I held it way too long, and here was my stop, and I just ignored my stop. That's a different conversation than maybe I have the settings wrong. Let me open this up and look at the settings
Yeah.
again. So that's a different,
Well,
Mhm.
and that's a dangerous thing that in the quant world we just call curve fitting, right? I can
Okay.
build you a back test that looks perfect. It has like a 97% win rate, and you're making billions of dollars on this. It's absolutely crazy. And I could do it right now. I could code something up. It'd take me 5 minutes, but it's not going to work in the real world, right? And that's the
Mhm.
same thing that traders end up doing with all these indicators and things like this, is that um, by curve fitting, you essentially mean the best example I can hear from this. If I wanted to do a survey of the average height of the people in my town, and I hang outside the male's basketball court, and I'm
Yeah.
just surveying guys that come out of there, and I'm saying, oh, look, the average height of Nova Scotia, where I live, is 7 foot tall. Like that doesn't make. I've just grabbed my data from a really
Yeah.
biased spot, and that's what a lot of traders do, where they'll tweak their indicator settings until everything looks just perfect on that one chart, but doesn't have any predictive value, right? And it's the same when you're back testing, is that if I'm just adding parameter after parameter after parameter and making the line look prettier and prettier, then I go trade in the real world and I get smacked, right? So it's
Yeah.
the same thing whether it's quant or whether it's just looking at the other stuff, is you have to just keep everything very broad and it has to make sense. And if it has an edge there, great. So then you work to kind of exploit that edge. And it's the same. Yeah, I don't know how many times people have been, the 10 period moving average didn't work. What about the 12 or the
Yeah.
13 or the
Yeah.
17? It's like, stop it.
Yeah, yeah. I love curve fitting. That's a good one. I'm gonna study that one because me and my wife were talking about CPI, the consumer price index. I said it. So if you made it to this far in the show, you got the answer. But anyway, um, we were talking about the CPI, and she really doesn't care about stocks. She don't want to hear this stuff. But
Hmm.
because of the election and things like that, she is paying attention to it because she was telling me like they keep saying inflation is going down, but our freaking groceries are sky high. Like, I don't know where they're surveying how much product food costs, but she told me she knows the numbers, and she told me this is
Hmm.
what we were paying last year. This is what we're paying right now, and it's the same grocery list. It's the same stuff, and
Yep.
uh, and I know it's the same stuff because I complain about it sometimes. But I wish the kids would eat something else besides cheese pizza. But anyway, but that same cheese pizza last year cost this, and now it costs this. Like
Yeah.
Taco Bell, going to Taco Bell used to be that's what you got because it was cheap and you can get a bunch of food for cheap. Now paying for Taco Bell costs as much as the fancy lunch, so you might as well just go sit in Applebee's and have the 12 $15 lunch with a beer because the regular three chalupas and a drink, that's going to cost you just as much. And it's so why have this crappy fast food? I'm just saying curve fitting and then what they're surveying, that just made me like that made me because we did have that conversation like where are they getting their numbers? Because it doesn't look like it's coming down to us and the gas and everything else. Anyway. And we don't talk politics on
Well,
the show. I'm just talking numbers.
yeah, but it also talks just goes to survey data as
Hmm.
a whole, right? And that's, you're talking a little bit about the CMT in the green room there. We're talking about sentiment data. It's the same thing. It's very hard to quantify surveys, right? Because, the 10 people you asked what their grocery cost was the last time you did the survey is going to be different 10 people than this time. So, yeah, it becomes very, very hard, which, just to bring it back to trading is why we look at price because Ralph
Yeah.
Alcampora, who I mentioned, who started the CMT, when he was arguing in front of the Senate, I think you can find these tapes somewhere about why the CMT should have the same professional status as the CFA. They started, because back then there's technical analysis with voodoo and blah, blah, blah. And he held up a chart in it, like an old school paper chart, and he pointed at it and he said, companies revise their earnings all the time, right? He said, this is a chart of Apple, right? They are not revising the closing price of Apple. It will always be this price, right? It always exists as this price. So that was actually one of the arguments that I think won him, getting us that status is just saying, listen, you can, they say CPI is this, but then they'll revise it 3 months later, whenever they want. But
Yeah.
the closing price of the stock is the closing price of the stock. They're never going to go back and change that, right? That's the way it is. So,
Yep.
uh, yeah. So getting where you get your data is very, very important. And that, again, with trading from price.
That's fantastic. Yes, yes, yes. And I don't want to go too long. I don't want to go too long because I know we both got things to do. And so that's awesome. The last thing I want to bring up is and don't jump through the screen here, but the difference between a pullback and a throwback. I see people talk about pullback and they use it wrong all the time. And I know this is a tiny little thing, and I know you're a CMT dude, so you're probably going to tell me don't make a big deal about it. But when they say I'm going to buy it, the stock is going up, and I'm going to buy it on a pullback, you're using it wrong. That's what I got videos I've been putting out, little bit videos. But why do we not use throwback anymore? Is it just not roll off the tongue? Because it makes sense. The definition of it makes sense. And you can Google it. Google throwback out there
Mhm.
if you don't know what I'm talking about. And then pullback makes sense. And it goes back to just even your idea, your trading system of the mean revision. It all goes back to the mean. And the definitions of things make sense. Like, but why don't we say throwback? And I am getting on my soapbox, but it's a small soapbox.
I think you're right. I think it just doesn't roll
Didn't
off
roll
the
off the tongue.
tongue. Another good thing that I think the CMT is doing is trying to, and I think they have to give way on some things, but they're trying to really define some of this language. But like one thing, I don't know if this was the same as when you started studying with your CMT, but they were calling moving averages trend lines when I would do it.
Oh, Mm.
So, and it's like that alone was just, it's just triggering me. But yeah, it's trying to get
Yeah.
everybody who's, calling things different things all over the place, and having
Yeah.
everyone sit down and say, no, this is what we're gonna, because it's a, it's kind of a silly thing and a soapbox, but I agree, because it's like um, we're we have to be able to communicate. That's what language does, right? So if you're
Yeah.
calling this one thing and someone else calling this the other thing, then yeah, it gets complicated. But I think it's just one of those things that, we just got to rope back in over time. So just keep correcting people, and maybe
Just
eventually
keep it.
we'll
It'll be my
we'll get
little
it right.
niche. It'll be like this one dude way over here keeps yelling about throwback. Let's give him a little bit of attention. And then I get my 15 minutes of fame, and they're like, nah, let's go back to pullback.
Yeah. Maybe that's the way. As long as they stop calling moving averages trend lines,
Oh, so
I'll be
yeah,
very happy.
I'll give you a little update on that. They talk about how moving average is synonymous with trend lines because you can they say you can use people use simple moving averages as trend lines because it follows the trend of the stock, and I'll find you the pages and I'll send you screenshots if you want to look at it. They
Yeah,
got it.
I still don't like it. They're two different
He
things,
said
right?
no.
They're two different. I still don't like it. I'm gonna give them a call, see if they can fix that.
That's funny. One of these days, it might take some time, but there'll be a small, short chapter. It'll be in the 2051 CMT book about the Strat by by,
I,
by
I
Jermaine
they
Magruder.
they got Elliott Wave in there, and that makes absolutely no sense. So they should definitely have the Strat in there,
Yeah,
right?
maybe that'll be my pitch. I'm like, hey, give me I'll there's two things. You can help me take out Elliott waves, or you can take I'll take out gains. I'll take the 3 pages you have on the pitchfork and gains, like the gains
Oh,
band thing, and like
yeah,
yeah,
all
all
that
that stupid
nonsense.
stuff, like the
Yeah.
nonsense stuff. Even if it's funny because even in the book it says there's no data that says this works at all.
Yeah, it's like, so yeah, why are you teaching it to me? I've only got so much room up there.
It's so
Just move
funny.
on with that. Yeah,
Yeah, I
get rid of
love it.
that stuff, put the Strat in. I
There
completely
you
agree.
go. There you go. Yeah, yeah. So put your bid in now. It's just if we start saying it now, by the time it gets to 2050, yeah, it'll be in there. I'll be in there.
Absolutely.
We got to gaslight them into it.
Yeah.
Or hypnotize them. Gaslight was the right word. Hypnotize them into it. So what do you do? Where can we find you? If there's anything else you want to say on the charts, you definitely gave us some awesome value, great knowledge, and that people can go out and Google and study for themselves and find another
Hmm.
book, and hopefully they come out and find you and see what you do. Because another thing that you do is algorithmic trading, and we also talk about that
Yeah.
in the Strat, and you're actually writing your own programs, and you talk about that extensively in your videos, and I see how much you're posting, and I'm gonna have to post more videos. I'm sorry, I'm gonna have to cover over. I'm gonna trend that, and I'm gonna have to beat you on that. But anyway,
Yeah,
you put out good
absolutely.
stuff. How can we see
Thank
more?
you.
Where can we see more?
Yeah, well, my name's Michael Noss, CMT. Really, if you Google it, I'm everywhere, right? I've all over the uh, I just use the same name everywhere, so you can find me there. And I've got a website called Stats Edge Trading where we use statistics as our edge over the market. So you can check me out there as well. But if again, I don't know, it sounds kind of full of myself, but you can Google me, and I'll pop up with all the social medias, I'm sure.
I think that's awesome. It's like hanging out with, like, I don't know. You brought up basketball. You get to hang out with your favorite basketball player, and he just says, "Nah, man, I just practice. It's fine."
Yeah, I'm
You
out
did all
there.
this. I just saw you slam dunk in front of this dude. Like, yeah, it's Tuesday. He'll be fine. It's fine.
But no, I had a lot of fun. Anytime you want to talk like this again, this was great. And again, I love just chatting with real people who really trade about trading. I think
Yep.
is fantastic, and it's needed in our industry that's filled with so many people who don't.
Yeah, seriously. And everything we talked about is quantifiable. So I love that too. Yep.
Hmm.
So I'm gonna let you go. Thank you so much for being on here, Michael, and I'll talk to you soon. Thank you.
Awesome. Have a good one.
You too. Bye. All right, thank you so much. So that's it. That's it with the Strat. And this weekend, this episode of the Weekend Shift. Thank you so much for being here. Thank you for supporting the weekend shift. Hit that little button over there that says thanks. Hit the tip jar, throw a little bit in there, keep the weekend shift going. Michael Noss, such a great dude. And again, it's all quantifiable. Go check out thestratsoldier.com. I have a brand new course out there, unlocking broadening formations. Unlocking broadening formations. That's where I talk about how to trade and uncover everything about broadening formations. Okay, go check that course out. And if you have the if you have the combat load of bundle, it's in there. All right, you got free access in there. Remember I told you about Martha a couple Saturdays ago? Martha got access to unlocking broadening formations for free. Anyway, this is the Strat Soldier. Thank you so much for being here. This is the Strat Soldier for the weekend shift. I'll talk to you guys later. Peace.